Hello everyone, this is Arif and today we are here with the CIA study course from CIA Part 1, Unit 1, Foundation of Internal Audit. This is a brief intro of my career trajectory, last 16 years in the field of internal audit. A little bit detail about my educational and professional qualification and the industry and the sector that I've worked. Just in case if you are interested in knowing me more, you can pause this video and read it, or alternatively, you can join me on LinkedIn. Uh, just look into where we are today. So this is the overall CIA syllabus. If you look at CIA Part 1, so there are mainly a couple of topics that we will be covering, or areas we will be covering in CIA. The first one is Foundation of Internal Audit. Then we have Ethics and Professionalism. Um, and these ethics and professional basically apply in all related areas of internal audit, be it advisory services, be it assurance services, GRC, governance risk and controls, and the last one is assessing fraud risk. So today we are focusing on the one of the key area, which is the foundation of internal audit in the Unit 1. Unit 1 approximately covers about 10% of the total syllabus. This is my rough estimations. It might be not correct to the last digit, but this is just a rough estimation just for your understanding purpose. And you can expect 10 to 12 MCQs might be coming from this area of CIA Part 1 syllabus. Overall, if you look at from the GLIME perspective, GLIME has 10 chapters or 10 units. Today we will be covering the Unit 1, Foundation of Internal Audit, and which comprises, I've already mentioned, 10% of the total syllabus. Within the CIA Unit 1, Foundation of Internal Audit, we will be mainly covering 4 areas. What is the purpose of internal audit? What are the key components about the internal audit charter? Then we would also look into one of the key um, element, we call it independence of internal audit. So we would see that what is the internal independence of internal audit, and what are the threats that can pose to the independence of internal audit. We will go in literal and in a more conceptual way to understand the independence of auditor. And the last one is the role of internal audit and risk management. So these are the 4 key topics that we will be covering. From your personal understanding purpose, to set the foundation, the basic thing we all know that we need to know why do we exist within the organization, the internal audit department. So it is important to know the purpose. The second thing is, once we know our purpose, the role and responsibilities are defined within a charter, a document which mandate what we are supposed to do. And in order to do our job, we have to be independent. But if there are threats to independence, how to overcome those, that we will cover in the third part of the Unit 1. And the last one is, what are the role and responsibilities of internal audit and risk management? It is an important because in some organization, despite the fact that you are internal auditor, you might be asked to carry out some of the risk management or entire risk management responsibility. So we have to have our safeguards and guidelines how we can go about it, and without hampering our independence. So there are certain key elements to that we will go and discuss in the Unit 1 syllabus. So here we are with our first topic, which is about the purpose, value, and effectiveness of internal audit. The first thing we need to know is the definition of internal audit, which set a solid foundation for the purpose of internal audit. Why do we exist within an organization? Internal audit is an independent, objective assurance and advisory services. It is important that I have highlighted certain words within the internal audit definition because each word is very important for our discussions and understanding, and it has been very carefully being used or selected within the definition of internal audit. So independent, the word independent means that we are the way we report within the organization and the way we are positioned within the organization, we have the autonomy and authority to perform our job without any due influence from the management. Objective is basically a free state of mind where we individually level we are objective, like we are fair in our giving an assurance or giving an or sharing the outcome of the internal audit. And advisory services, so there is not always that we go as a police officer and check what are the controls, are things doing or happening the right way or not. Sometimes we become a consultant based on our expertise. We share some insight or foresight to the management, like based on the review of certain processes, what might can go wrong, or sometimes we just assist the management without taking the responsibility. So it is very much important to understand that these key terms as part of your understanding of the internal audit concept. So let's see, internal audit is an independent, objective assurance and advisory services designed to add value and improve organizational operations. It helps an organization accomplish its objectives. So we are there to help the organization to achieve its short and long term objectives by bridging a systematic, disciplined approach to evaluate and improve the effectiveness of governance, risk management, and control processes. So basically, as an internal audit department or as an internal auditor, we have a very structured approach when we carry out our internal audit activities. And once we carry out our audit activities with a due professional care, we provide an opinion and the recommendation to strengthen the organization overall governance. Governance means how the organization is being operated, risk management, how they manage their risk, and control processes, how they mitigate those risks. So we provide value addition to these uh, critical areas of the businesses. Now, from this definition, we can form the purpose, which is to deliver independent and objective assurance and advisory services. So mainly, internal audit carry out two types of activities, or can be categorized into two types of activities: assurance activities and advisory. Assurance is where we perform hardcore audit activities, and we give a fair opinion about or conclusion about whether the things are happening the right way or not. And advisory services is basically consultancy assignments where we help the management to improve control gaps. Secondly, what is our main focus? Our main focus is to strengthen the overall organization governance, the way the organization is being operated, the way they manage their risk, and what are the key controls to mitigate those risks. So we help them to strengthen these three key areas. Our goal is, as any other department within the organization, that the organization may achieve its objective. Inside internal audit, back in the days, it was always said that internal audit is like post-mortem, where already event has happened and now we come and evaluate the historical data, which is not the case anymore. So internal audit not only review the current processes and historical data, but based on those historical trend, we also give some foresight or predictive emerging risk within the company, and advise the company or give recommendation that how to overcome or to be mindful about those risks, to mitigate those risks through controls. Um, we provide a risk-based advice to the management, which means that we focus mostly on the high-risk areas, which are more critical to the organization, because the organization have limited resources. So we, as an internal audit, prioritize on the key high-risk area. It doesn't mean that we ignore or neglect the medium and the low risk, but our main emphasis is to have optimum level of resource utilization. In terms of value, we enhance oversight over different processes within the organization, help management to make easy decision, and we by which they they are able to gain trust within from the different stakeholder. So any organization which has a strong internal audit, they might being looked by the banks, by the financier, by the regulators, much more credible as an organization. Reputation, we build credibility and serve public interest, obviously, because if we provide the assurance on different services within the organization, so which helps the public interest in terms of taking the right decision, whether investing within the company, using the products or anything. So that gives them a trust. It might be direct or it might be indirect. um, in terms of standards, internal audit has our own standards by the Institute of Internal Audit. So we perform our audit activities in order and within the mindset of being in compliance with those standard globally, and if locally, if there are certain practices or regulation that has to be followed, so we follow that as well. Independence, it's very much important that same like a jury or a judge, where if they are not independent, no one will trust their judgment on any case. So similarly, internal auditor has to be independent and objective. So independence is basically comes from the positioning of the internal audit department within the company, which means that the internal audit has to report to the board of directors or to the member of the board of directors through audit committee, rather than to the CEO, because if they are reporting to the CEO, then they will be under the influence of the CEO, and by which they might not report all the wrong things or key emerging risk within the company. So we need to be positioned very well within the company, which is independence. And objectivity means that we have to be more objective in our mindset, that we are not influenced. For example, we might not feel that because I have a friend within the department, so I might be a bit more lenient, or if I might get any benefit from someone, so I have to change my decisions or my audit work program accordingly. So we have to be very clear and objective in our mindset as well, to be a credible internal auditor. Here we are with the other slide under the same topic: purpose, value, and effectiveness of internal audit. In this slide, we will be discussing about what are the internal audit mandate and what is the chief audit executive responsibility. First of all, why we do exist and what is the purpose of internal audit, that is being formally drafted and documented and approved in a document called Internal Audit Charter, uh, which is being approved by the highest authority within the organization or in governance system, which is by the board of directors. They don't do it themselves. They do it sometime through audit committee, or sometime they approve by themselves. So there we can have, in this document, we have the role and responsibility, why we do exist, and what is the purpose. It defines also the scope area. For example, in what are the key areas that we will be covering in our internal audit assurance services, or what are the guidelines for the advisory services. Uh, Sometime when you are working with a very complex holding companies, so they might say that your scope area is you have to restrict up to subsidiary level, you don't have to go and audit an affiliate or other investments. So these mandates define the scope or the boundaries under which we can work. It also defined the authority that internal audit has the access to all type of data or record within the organization, people, and operations, because it is very much important for us to have those free access in order to evaluate processes and give our conclusion based on that. And also talks about the reporting line of internal audit, which is the dual reporting. Functionally, internal audit report to the audit committee, and if it doesn't have a company doesn't have an audit committee, then ideally to the board, and administratively to the CEO. So it is important for you to understand what is the difference between functional reporting and administrative reporting. Functional reporting means that our charter is being approved by the board or audit committee. The role and responsibilities are defined there. The audit committee make the final decision about the hiring and firing of the chief audit executive. So the CEO doesn't have that authority. Then the audit committee also approve our annual audit plan periodically on a quarterly basis or half yearly, or there's a frequency which is defined in the audit internal audit in the audit committee charter, basically the frequency at which we will be reporting to the audit committee, and if we face any challenges with the management, we address this to the audit committee. So this is our functional reporting. However, in terms of administrative reporting, the CEO has to provide us the support, for example, in allocating the budget for the internal audit, assisting them with the hiring of the internal audit through HR. Sometimes the CAE performance evaluation as part of the organization, as part of the employee of the company. However, ultimately it is being reassessed by the audit committee, but we follow the same organizational hierarchy as any other employee within the company. In some companies, it is purely done and referred to the audit committee. In other organization, it is done administratively through HR process. The chief audit executive expenses, for example, traveling related expenses, some out of pocket expenses, regulatory compliance to provide the support in that. So these are administrative elements which is more inclined toward or provided by the support provided by the CEO. It is very much important for the chief audit executive that they align the internal audit charter with the laws, with the local laws, standards, and regulations, and within the company strategy as well. It is important for the chief audit executive that they should at least bare minimum annually review the internal audit charter and align it if there are any organizational changes within the company, or if it is changes in the standards or regulatory requirements. So accordingly, they have to revisit annually, just in case if it requires any changes. And lastly, we have to make sure that all the internal audit activities are much more coordinated with the management and are not duplicative in nature, because we have a second line of defense. Sometimes we have external assurance providers. So we have to ensure that we are not doing duplicated or duplicating the job, but rather we are giving more effective and cost efficient internal audit activities to the company. So now our second topic is the internal audit charter. So in the previous one, we talked about the purpose of the internal audit and what are the mandate of the chief audit executive, or the role chief audit or the role and responsibility. Those role and responsibility, as we have previously discussed, is defined in the charter. So now we will go a little bit more specifically toward the internal audit charter. It's more or less duplication, but you will find such kind of duplication in the CIA course material. So here we have a specific standard by the IIA, which requires the charter to define the purpose, standards, scope, expectation, and reporting line of for the internal audit activities. It is important they set the bare minimum requirement. It doesn't mean that the internal audit charter only comprises of these 5 components, but these are the bare minimum that needs to be there. In fact, we have a model internal audit charter available at the IIA website, just to benchmark or use it in case if we do not have an in-house internal audit charter which set the bare minimum criteria for internal audit. As we have previously already discussed, the scope basically comprises whether we will be performing assurance, advisory services, some investigative activities, and also in terms of how much coverage within the organization we will be performing. Authority and reporting, which basically reflect that we needs to have as an internal auditor unrestricted access, people, processes, operations, documents, and our dual reporting to the board and management or administrative reporting to the CEO. What is the responsibility of the board towards the internal audit charter? That they have to review and approve the charter, and the management has to provide the support in when we are drafting internal audit charter. We also take input from the CEO, just to be aligned with the company overall objectives, strategies, and also for an awareness purpose. So they should be much more aware and feel inclusive within the governance framework of the organization. Administrative reporting, we have already discussed, where the budgets, staffing, performance, expenses, these are the elements where the CEO can provide support to internal auditor. And it has to be, it is important for the internal in order to obtain such kind of support. Without that, we will not be able to deliver our services. Customization and review, it is important we are more aligned with the organization. So if there are changes within the organization or standard changes, so such kind of changes needs to be reflected at least on an annual basis. We have to review our internal audit charter. Safeguards and quality, it is important that we ensure that or we define clearly within the internal audit charter that the internal auditors, they need to be independent and objective. Independence will be ensured through the right positioning of the internal audit, and objectivity through the right mindset. Like we are not the management should not request from the internal audit to perform certain management activities or take certain decision on behalf of the management. Otherwise, we would not be objective. Also, the communication protocol, the frequency of internal audit reporting, it is important, and access to the CEO as well. This is also part of the internal audit charter mandate. And lastly, the quality assurance mechanism, that how internal audit has to ensure that they do in a proper way internal audit activities. If you remember, in the purpose of internal audit, we have a few terms like we do systematic and disciplined approach we follow. So that is where the quality assurance plays a role. So if we are following a systematic and organized way, proper planning, proper field work, maintaining all the documentation, getting out proper performing proper audit procedures, then having a proper audit report, communicating it properly. These are all part of the quality assurance. We also quality assurance mandate that we need to have like proper competence level, right people, staffing, access to the information. This is all different component of the quality assurance. So these are all the key elements which are defined in our internal audit charter, which is being drafted by the chief audit executive, reviewed and endorsed by the CEO, and approved by the audit committee or the board. So far, we have covered the purpose of internal audit and the internal audit charter. And now we will be covering the impairment of independence. So what if our independence, as we have already discussed in the previous slide, about in which we were talking about the internal audit charter, where one of the key elements that we safeguard or we put guidelines that internal audit has to be independent and objective in carrying out their activities, and that can be assured through certain mechanisms that we will be discussing here in detail. Before we go and discuss about the impairment means the threats that can lead to uh, certain risk to the independence of internal auditor, that we will be discussing here. But initially, let's go into details and what the standard says about internal audit independence. It is important to understand the structure of the new internal audit standards, because without knowing the structure of the new internal audit standard, you will be always confusing the entire CIA part one, in your part one basically, that how the principles take into its place within the standards, what are the standards, what are the ethics and all. Just to give you an overview, so the new internal audit standards has five main domain. Within the five domains, they have allocated 15 principles that what they believe we have to achieve. And then in order to achieve those principles, we have 52, if I'm not wrong, to be precisely, standards to how to implement certain activities in order to ensure that we achieve those principles within the five domain of internal audit activities. If you wanted to have much more deeper understanding of the internal audit standards, I have shot a video some time back on the 2025 internal audit standards, so you can look into it. It will give you a comprehensive overview what what constitute the new internal audit standards. So as I've mentioned you, within the five domains, we have first principles, and how to achieve those principles, we have supporting standards. So here the principle 7, which talks about the independence, we will read and then we will say what the standard says, how we can go about it. So the principle 7 says positioning, which is about positioning independently. The board must establish and protect the internal audit function, independence, and qualification to enable objective work without interference. So this is the objective which we want to achieve, that the board has to provide that support, that by which we as an internal auditor believe that we are independent to carry out our audit activities. Now the standard will mandate how we can go about it. Organize Standard 7.1, organizational standards independence. Sorry, the CAE must annually confirm to the board that the internal audit is independent and report any impairment along with safeguards taken. So here, how we will ensure that the internal auditors or the internal audit activities are being independent. That every year the CA has to report, and if there is an impairment to the internal audit independence, they have to tell, or if there are certain safeguards that we can take in order to preserve the independence of internal audit, that we have to tell to the audit committee or to the board. So let's deep dive a little bit more specific responsibility of the board in terms of independence. The chief audit executive hiring and firing can be done by the should be done by the board or audit committee. This is how we enforce independence, ensure audit independence through this, and also the positioning of the audit committee or the reporting line, that we directly report to the board and we have a free access to the board and or audit committee members. So this is how what are the key responsibility of the board. Now coming to the chief audit executive responsibility, annually we have as per the standard, we have to confirm our independence and disclose impairment, any threats that may pose to the independence of internal audit, and recommend safeguard just in case. If we cannot avoid it, we have to tell what we can do about it. Sometime, for example, the internal auditor is being asked to perform certain activities beyond internal audit, for example risk management activities or compliance, then there are certain safeguards that we have to take, that we have to tell to the audit committee as well. Management responsibility is to support the chief audit executives in ensuring their independence, enabling an environment where they can have free access to the board, and provide the resources that the internal audit need to perform their activities through personnel, the staff, through resources, um, and allocating budgets. So these kind of support the management can provide. So now let's see what are the situations that lead to the impairment of internal audit independence. The most common are management restrict our access to information, records, people, processes that could lead to creating bottlenecks for carrying out the internal audit activities. And when we do not have access to such information, we would not be more objective in giving assurances of certain processes within the organization. So that could be one of the reason. Sometimes they request to eliminate or to lower the tone of the audit findings, or change the audit findings. So this could be another way by imposing an impairment to the internal audit. Sometimes they pressure to alter the results. Um, they might not allocate the proper resources in terms of budgets cuts to internal audit department. For example, we might not have expertise to carry out a cybersecurity audit, and the management does not allocate budget to go for outsourcing the cybersecurity, and within the team we do not have resources or capability. This could be a reason. Not letting hiring more auditors. So these could be different tactics which might be used by the management to impair our independence or undermine our work. um, and sometimes there is a conflict of interest, means that the chief audit executive might be asked to perform certain management activities, um, and eventually when he is supposed to carry out audit activities, he might not be comfortable enough to give assurance on the same activity which he has performed, because if he highlight any weaknesses in that case, he will be questioned that you were doing the job. So there are certain safeguards, there are certain ways of overcoming those conflict of interest, or there could be um, other conflict of interest. Maybe for example, the chief audit executive has to report on someone who is a close relative to him. Maybe the company does not have a very stringent policy where such disclosure needs to be made. He might have a close affiliation with some employee, or may have a material interest in terms of getting some favors, either in financial terms or work related favors, while compromising on their work. So these are different kind of conflict of interest which needs to be taken care of in order to ensure that we are more independent. Non-audit roles, anything that the management requests or sometime the audit committee enable us to perform, for example, risk management activities or compliance activities. There are certain safeguards that needs to be taken care of, that once we carry out such certain activities, we still make sure to the management that the ultimate decision maker or the responsibility falls on the management, despite the fact that the internal auditors are performing those activities. Secondly, those who are involved in such activities needs to be not enable them or make them responsible to carry out audit within at least for a cooling period of 12 months. And there should be a timely transfer of that role to the management. It cannot be a permanent role where internal audit can presume such activity for a very long term period. So these are certain safeguards that can be taken in order to ensure that internal auditors are more independent. um, Lastly, maintaining independence. The chief audit executive, his role or responsibility is to evaluate on a yearly basis and disclose all the impairment, if there is any, or if he believes there could be any red flags to the independence of internal audit, to the board. And yeah, by this we ensure that the activities which we perform are much more reliable and trustworthy by the stakeholders, because if we maintain our independence, we would be more objective in our carrying out our audit activities. So these are some of the key elements related to the independence of internal audit, and how to safeguard the impairment of the internal audit in the third part of the unit. This is the last topic of our Unit 1, the role of internal audit in risk management. There are certain key important elements that we need to take into account. Firstly, as I've already mentioned, we need to know the principle, the objective, and then we have to furthermore understand the standards, how we can achieve those objectives related to the role of internal audit and risk management. So the Principle 9, plan strategically, states that Chief Audit Executive must align internal audit activities or internal audit plan with the organization's risk and long-term objectives. We will diagnose this statement into much more detail, but first go through the standard as well. The standard 9.1 states understanding risk. Chief audit executive must understand governance, risk management, control to develop effective audit strategy. So basically, what happened that whenever we carry out our annual audit plan activities, we have to go and refer to certain um, key risk reports within the company or the activities of the risk management department. In on a practical term, internal audit obtain the risk register from the risk management department and see what are the key risks, and they align those risk assessment with your own internal risk assessment, because we have already performed certain area audit activities and follow-up activities. So we also have our own independent judgment about the risk apart from the risk management department. The risk management department have their own way of compiling and consolidating and reporting the key risk of the organization to the management and to the risk committee. They define the risk appetite, which are acceptable level of risk within the company, and risk tolerance, that how far we can tolerate. And then if we if the organization breaks such limits, then they have to report, and the management has to take certain action to mitigate those risks within tolerable and acceptable level. So those reports are very much important for internal audit to review in order to carry out an effective internal audit plan for the year or for the long-term 3 years plans. So what are the key things that internal audit has to do? They have to understand the key risk within the organization, be it related to the data, documentation, operational effectiveness, how the operations are happening within the company. It could be related to the assets and regulatory compliance. So these are the key four elements that we can drive within those risk reports. It is also important for the chief audit executive to build an insight within the organizational risk activities and engage with the leadership, with the management as well, analyze risk report and align the risk framework or appetite in order to better understand what is the tolerance level within the organization, what are the acceptable appetite, and if there is breach of those, is there is a proper effective reporting or not. So these are direct or indirect ways by which we become more inclusive in our strategic planning, and our audit plan is much more aligned with the organizational direction and long-term objectives, and hence we provide value addition to the company. Whenever we talk about risk management, it is important to have a clarity in mind in terms of who does what. So there is a very beautiful model. We call it the IA3 line of model, which clearly define the role and responsibilities within the organization. They break down within three different layers, which enables the organization to strengthen its governance. The model clarifies basically how to manage or who manage the risk, and who strengthen the governance, and who provide the assurance. The first line, or the first line previously, the same model used to call three line of defense, which were much more easy to comprehend rather than three line model. So I will be using the same, but the new name is three line model. So just stick to three line model. But the word defense is important because it conceptualize that how we are providing a defense against the risk. So there are three walls, you can say, or three layers that the risk has to pass through in order to affect the organization. So if we have effective walls or effective layers, if not the first line, the second line might catch the risk. If not the second line, then the third line might catch the risk. And eventually, if all three fails, it might expose the company to a major risk or potential negative consequences. So let's break down the organization into three lines. So the first line basically are the operation people, which own the risk. For example, if you are in manufacturing, the production people, the people who handle the inventory, the people who carry out the manufacturing activities. In a construction, the laborers, they are the first line. So these are the people who roll up their sleeves and then do the dirty work and carry out the operations. In a service-based organization, these will be the people who are uh, picking up the phones and perform or providing the services to their clients on the front end. So these are the people who basically are the first line, which are who supposed to own the risk. Means that these are the people who has to ensure that they do their job in a more effective manner in order to not expose the organization to any risk. Then we have the second line. The second line are the people who support the first line in discharging their duties. For example, they are the people who are partially independent. They will be performing a check and balance on them. They will be creating, for example, health and safety people, quality assurance people, compliance team, risk management team. They will be periodically reviewing their work just to ensure that they do not expose the organization to any major risk, and they take care of those risks. So the second line more ensure the compliance towards the company's policies, procedures, safeguards, regulations. The third line, which is completely independent, is the internal audit, which provide assurances whether the first line and second line are carrying out their assigned responsibilities in a more effective way. And if there are any gaps, then we identify those gaps and recommend improvement. The external auditors are also part of the third line of defense. Value of the model, it prevents the role overlaps. So each individual, whoever falls in whichever classification of those defense lines, they know their role and responsibility. It enforces clear accountability and elevates the risk-based decision making, because we ensure that those risks are properly managed. So it enables us to make more risk-based decisions. What are the key principles of three-line model? Effective governance requires board oversight, clearly defined role responsibilities, independent audit reporting, integrated. So basically, these are the key principles which ensures that we are able to achieve the clarity of the three line of defense, that we need to have a proper board oversight, that the board enable or or look after the company in terms of whether the management is performing their job in an effective way or not. They clearly define the role and responsibilities. We have to ensure the internal audit is independently reporting, and integrate assurance collaboration means where internal audit might collaborate with the risk management and the management compliance team to ensure that our outcome is much more effective. So we might take their work and use as an internal audit work, but the responsibility will be on us, or sometimes we can use these department to avoid any duplication. There could be also possibilities some external assurances are being carried out within the organization where we can collaborate with them. We have to collaborate within the organization to give a value addition to the company. So this is the last topic for the unit 1. Here we are at the end of the entire unit 1, in which we cover 4 key topics. The first one was the purpose of internal audit. The second one was about the internal audit charter. The third one was about the independence and the impairment of independence of internal auditor. The fourth one was the role of internal audit and risk management. So these are very essential concepts which are very much important. You need to have a very good command and clarity over it, because these topics will set the foundation for the whole entire CIA Part 1 going forward. So try to to ensure that you have a clarity over these topics. If you don't have, refer back and try to revisit each topic and again until you have much more clarity. Thank you very much for watching, and hope to see you in the next video.